And welcome to our pick tonight. Let's take a look at its pick for 2014. We're looking at short the SJM Smucker Company, ticker symbol SJM. Now we're going to look at our proprietary risk reward ratings here from Tradespoon, and it's coming in at a 4. So that's at the mid-range of our 1 to 10 scale. And we also have the value momentum at the level 4, so it's in that mid-range as well on that 1 to 10 scale. So we want to keep an eye on this. And as always, you can dig deeper into our proprietary risk ratings and also the fundamentals and technicals by our free analysis report. Digs real deep into these concepts, so please take advantage of that. Now taking a look at the price action in SJM, we're looking at the closing price of $96.12 as of the 17th. That's off of the 52-week highs of 114.72, and it's above the 52-week lows of 87.10, so we're right in that mid-range. We do see the IV percentile up into that 70 percentile range, which means that IV is 70% higher than its 52-week low. That is significant, especially for you option sellers, so definitely keep an eye on that. This is something that option sellers look out for. The return on capital for the spread strategy is at 72%. The probability of success is at 60%. And the estimated move right now is being priced in at 275 going into April expiration. Now taking a look at the stock trade, we're going to be selling short stock SJM at $96.12. Now if we're filled at that limit price, we're going to put a buy order below our entry to cover this short. So buy to cover, and we're going to put it in at $86 roughly, and we're going to do that good cancel. We'll also put a sell stop limit, or excuse me, a buy stop limit. That is a buy stop limit above our entry price. That's just to close out of the strategy if it starts to work against us. And we're going to put that up at $106 roughly in 20 cents. And we're going to do that as a buy stop limit good till cancel. Now, the options trade, we're going to be buying the April $100 puts. We're going to put in a limit price of $4.40 or better. If we are filled, we will put a sell limit to close in case the capital appreciation kicks in. We're going to put a sell order of $4.40 below our entry price. So in this case, we would have a sell limit in to take profits at $8.80. Now, we are willing to risk $4.40 per contract, so keep that in mind on your risk and capital management. We suggest no more than 2.5% to tops 10% for you smaller account holders of either the cash available or the percentage buying power. For you stock traders, it's 3 to 5% of, again, the cash available or the percentage of buying power available. Now, taking a look at the option spread strategy, we're actually looking at a bear call spread. So we're going to be selling a call spread. That means that we're going to be receiving a credit. Now we're going to sell the $95 calls for $270, and we're going to buy the $100 calls, which is above that strike that we sold, because we don't want to have that unlimited risk. We're going to pay 60 cents, which means that our net credit is going to be $2.10. That's our total potential profit, or in other words, our target gain. So if the stock stays at or below $95 until April expiration, we could capture that $2.10. Now our max loss is going to be $2.10 higher than that credit. So in other words, we're going to put a buy stop limit order in at $4.20 to cover this spread if in fact the market does decide to go to the upside. That would work against us in this case, but we'll cut out of this trade at $4.20 just to cut our losses. And again, if you've never traded any one of these strategies before, take a look at our virtual trade that we offer here from Tradespoon. Now scrolling down and just taking a look at the stock background and analysis, the stock chart, it's been a little bit in a range right now, I would say, between 92 and 98.5. So that has been a pretty decent range of $6, but still, again, on the upside right now and above those short-term moving averages. The one thing that we always want to check is key stock events, not only the fundamental and technical components, but those binary events. In other words, we want to see if there's any earnings or anything going into either March or April. And at this juncture, we don't see any key stock events other than these technical and fundamental components that can, again, help us ascertain what's going on with the current market and the underlying. As always, we have our news and commentary at the time of the pick that you can drill down to and take a look at even more in-depthly. As always, if you ever need any help, please email us at info@tradespoon.com. And please take advantage of our upcoming training webinars. We have one on March 19th as well as on March 20th. March 19th is going to be in the evening from 8 to 9 p.m. and March 19th or 20th is going to be at noon, so over lunch. And this is about Meet the Greeks, nice little class about the Delta Gamma Theta Vega Rho, just helping you understand how time and volatility as well as option price influence the pricing of an option. So we'll take a look at that on those 2 days. So please feel free to join us. And as always, we thank you for coming tonight, and we will see you tomorrow. Take care and have a great trading day.